Moving along, I think I'm going to turn this back over to, or move back into our conversation that we started about finances and trying to come up with creative funding solutions. As was stated earlier, none of this is free. It's all going to cost something. So whether it's constructing the infrastructure or maintaining it, but of course we know that our local communities in Michigan also are very cash strapped. And how are they going to pay the costs for maintenance of infrastructure they have, let alone trying to upgrade or expand? So clearly we need some more creative financing options. So maybe Peter, kind of turn this back over to you if you want to continue thinking or sharing with us some, and others as well, about smart infrastructure financing, clean tech development. These are things that you've been working on for several years. So would you kind of pick this conversation up again about how we can creatively finance some of these infrastructure needs in the state?
Actually, let me start out with a question that's also for the entire audience. Anybody know what the first major piece of infrastructure built in the United States with crowdfunding is? First crowdfunded major piece of infrastructure. All of you know it.
York, Pennsylvania water system. 1990 or 1790.
Okay, I'm going to ignore that one, the 79. Another one, everybody knows this one. And probably most of you have driven across it. The Golden Gate Bridge. So the Golden Gate Bridge in California was actually financed by citizens in a crowdfunding model in 1930. Since then, of course, operations and maintenance require new types of financing models and P3s, and now you pay your fees to get across the bridge and all of that. But we can never say, to your point earlier, that when you have impassioned and empowered citizens, they can build a nice piece of infrastructure. It's possible. So coming to the 2000s and this day and age, when I talk to communities, one of the things I say, you guys got to learn how to play the Moneyball game. Anybody here seen Moneyball? If you haven't, see Moneyball. Oakland A's, right? So the whole idea behind that is, and it makes it's very salient to the conversation on smart infrastructure and how you finance this. So how do you build a world-class baseball team on a fraction of the dollars that you got available? They essentially were a poor baseball team, right? They had no capital, they couldn't afford the $300 million players, right? They had 15 million. And what are you going to get for 15 million? Well, they looked at all the data of all the different players. How did they throw? How efficiently how they threw? Their underhand to throw, overhand, all sorts of things. Right? So look at the data and basically said, I think, even though he's an odd duck, on a game, he actually completes, and actually allows us to have home runs and whatnot. We're going to buy. He's undervalued by the market, but we're going to pay him 15 million and we got a world-class team. Of course, it only lasted for 2 years. We want our infrastructure to last for longer than 2 years, right? So now go to DC Water, right? So DC Water, a public water authority, is the first experiment with a new financing model, right? A variable interest rate bond, or call it an impact bond. There's all sorts of language around that, right? Which is essentially the first model by a public agency to actually incorporate operational data and inform the financials. So here was the choice. Either we're going to put a $2 billion pipe in the ground to convey our water and our overflows, or we're going to build green infrastructure above ground for $350 million. $2 billion, $350 million. To a community, to an agency, big difference, right? So, of course, the green infrastructure or smart infrastructure is a new thing, and anything that is a new thing carries risk. Right? So in order to finance 350 million instead of a pipe, which we've been financing for hundreds of years, right? So they needed to actually then provide the investors with an incentive. So here was the incentive. The argument was, DC Water said, if you're going to build a 350 million green infrastructure above ground that can divert all the water and actually move water away from our old gray infrastructure below ground, it reduces our O&M costs. And we're going to actually share out of this operations and maintenance cost to the investor that if this infrastructure performs better than expected, instead of a AAA 3.45% yield, you actually get 6 1/3 yield. So it was a win-win for the agency, for the community, because they had to take on less debt, and for the investor. So this whole Moneyball game is really about all the communities that we have, including the poor communities. They sit on data. They don't have, it's not about glitzy sensors. It's not about, having Google-type buildings and whatnot. That's not it. I mean, you got reports, right? You got operational performance. You got information on pipe breaks. You got information on how well the community likes the service that's being provided by the agencies. That is all data. And that data actually helps. Of course, now we need to start thinking about new job creation, right? Because effectively all the infrastructure, smart infrastructure, is a tech play. It is no longer the way people used to maintain and manage and operate infrastructure. You need to become more tech savvy. So there needs to be, data scientists at the county level or at the state level to start looking at that kind of data. And here's the reason why we need to start doing it. I'm going to get to your poor communities too. One of the reasons we need to start doing it. So I'm working with Nuveen. Nuveen is an investment arm of TIAA, right? Which we know as educators, most of us know that quite well. So Nuveen is the third largest holder of muni bonds, municipal bonds in the United States, third largest. They're starting on an initiative to reprice and revalue all muni bonds in the entire United States by integrating operational data and just other intangible information data on every piece of infrastructure that was ever financed in the US. So basically, so now here's the value to communities, right? So if you even have some information, it doesn't have to be the glitziest sensor that Leo can come up with, right? It could be whatever information, whatever information, I guess, that is available in a piece of infrastructure. If you integrate that in, our water system, our energy system, our road system does this, that piece of information is now starting to get used by investors. They reprice and revalue, so you get preferential rating on a bond or on debt. Preferential rating on bond or debt means reduced interest rate, means lower cost of capital to the community, right? So it's a whole trickle-down effect from information to cost of capital. And which public finance manager does not want to have low cost of capital and infrastructure? I mean, find me any of them. So now, regarding the poorer communities, we have a lot of conversation around that, because once you have a smart infrastructure system, the whole, I would say, financial model kind of changes. I mean, think about a bond, a traditional bond. You issue a bond, say, on a road, on a water system, or whatnot, right? It goes back to either revenue that you have to collect from the community, or it is priced based on the credit rating from the community. So again, Hamtramck, different from Ann Arbor, right? So, or Flint or whatnot. So one is going to pay more for debt than the other one. So in that sense, the current financing systems actually bias against poor communities because of that. Smart infrastructure finance, what it does is because it creates that data pool, that information pool, that gets actually transacted and valued in business-to-business markets. So now, so you're sort of almost shifting the agency, I guess, or the business to community line to a business-to-business line. So even then, a poor community can still capture some of the cash flows that come out of the business-to-business transactions. But this is a whole shift of thinking, I guess, around how we think about infrastructure systems. But hey, if the big investors are starting to think about pricing muni bonds that way, we better, it's already happening. This is not a new thing. It's been happening, and we have to sort of get ahead of that 8-ball. And I think there's a lot of opportunities and a lot of educational opportunities as well, which is why we're launching a new Master in Smart Infrastructure Finance at the University of Michigan in the College of Engineering. So all the design engineers and everybody else can take it and learn about these new financing models. Thank you. That was my little plug for today.
Thanks, Peter. Do we have any more, a couple quick points on that topic?
So just to pile on a little bit here, data has value, and the data will be present in the communities, it'll be present in NDOT and so forth. And so I would look at ways to get the American private sector involved in building out our infrastructure with access to data. But as part of that, when we make foreign military sales, typically, sir, there's a provision in there for us to source some of the materials in the host country. And that's part of the deal. Well, we could have a deal where to get access to the data that MDOT has and so forth for a fee, right? They also have to provide infrastructure dollars to expand out into the poorer communities because data has value. And that value will only go up over time. So I think that's part of the creative solutions. And that's a role that the private sector and government and the universities can play in.
One more.
If I can quickly, I think that's where the knowledge gap is, though, because we don't understand that value, and therefore it's difficult to identify those win-win-win opportunities that Peter described. They're there, but we've got to leverage the data in order to understand the value.
Elizabeth, just quickly to Dean's point. So the company that I work for has 1/3 of North America's traffic signals. We have data on 100,000 intersections. We can't get all of it because some of the technology is old, but we're in the process of getting that. What we've struggled with is, okay, well, now what value does that have, right? How do you monetize that? So that's one of the things that I'm really interested in your smart infrastructure finance piece, because that's the conversation people have now. How do you monetize what we have? We sit on a whole bunch, but who's it of value? Who wants it and who wants to pay for it to help build the rest of it?
I don't want to hog time here, but just to answer that particular question, there's sort of mainly three buckets that people look at in terms of data. And the first bucket is the one that we've always been looking at as an infrastructure is how do the data inform or improve our operations and maintenance. That's the first sort of bucket of data. The second bucket of data is the equity value. So basically, how does the data inform the equity appreciation, I guess, if you will, of infrastructure within a community. And that includes a lot of intangible data. That is anything from carbon reduction to happiness of the community to, all these other factors and whatnot. And then the third piece, that's equity. And equity is not transacted. So equity is just appreciated in a market kind of valuation context. The third one is derivative data, and that's the one that you're talking about. That's where the data auctions come in and all these other contracts and whatnot. So everybody, not everybody, but the financiers starting to look at these three buckets associated with infrastructure. But there was another piece that both of you brought up with regards to data, and that is, the whole privacy issue, right? Privacy and cybersecurity issue. And so there's a lot of conversation on many communities, from cities to smaller communities, and that is how do we start thinking about another word here, data ontologies. How do you bucket different kinds of data with respect to privacy considerations and cybersecurity considerations? So the British are starting to talk about a data commissioner, an elected data commissioner that becomes part of cities and larger communities.